Securities. First and foremost, a warm welcome to all of you for attending this webinar on a topic called e-margin MTF. When we talk about the margin trading fund or the topic called e-margin, few important things to be noted. When a customer takes the positions in e-margin, he pays a small amount, a fraction of amount. The remaining amount is being leveraged by Hdfc Securities. So this product helps the investor to amplify more returns in terms of the product when a customer buys stocks from MTF, that is called as e-margin. In today's webinar, we'll talk about some certain points which will be as follows. Features of e-margin. We'll talk about the features, how e-margin functions and how it helps our investors. Second, it will talk about the understand the concept between e-margin and cash. So most of the customers buy positions or take positions in cash. They buy stocks for a long term and they hold on positions for a long term in cash. Third, how to check the upfront margin. How is the margin calculated? When I talk about margin, the customer pays small amount of margin. Remaining is being paid by Hdfc Securities. So we'll talk about margin as well. We'll talk about the consolidated report. When customer pays a margin, he also talks about consolidated report. How will I check my consolidated report? How will I see my profit and loss? How will a customer check how much margin is applicable in which stock? So all those details are available in this consolidated report, which is sent to the customers. We'll talk in that also in detail. We'll talk about MTF pledge because the pledge sequence is very important. The customers needs to pledge those shares on T+2 basis on every time when the position takes the position in e-margin. So we'll talk about that as well. We'll also cover the margin charges. So how is the margin charge? How is the margin being calculated? We'll talk about that as well. And finally we'll talk about how to place an orders, how to check and how to place an orders in e-margin from ITS or a mobile app platform or a pro terminal platform. So it's absolutely fungible. So we'll talk about all these things in today's webinar. Let us go with the features of e-margin. The first point, buy today and pay on or before 275 days. So when I talk about 275 is the trading days, which means it is Monday to Friday. If it's a holiday, that is also removed. So approximately comes to four quarters. That means around 12 months. So there are 52 Saturdays, 52 Sundays. So removing all those, we get roughly around 1 year to hold these securities. So 275 days approximately, it comes to around 4 quarters, that is 12 months. So when a customer buys today, he can pay a small amount and the remaining amount he can pay later. For example, if I want to buy a share of called TCS, I want to buy for 1 lakh rupees. I will not buy paying 1 lakh rupees. I'll pay only 30,000 rupees. Remaining 70,000 rupees I'll pay in breakups to HDFC Securities. So that how it helps the investors to pledge the take the positions in e-margin, which means it enhances the buying power. It enhances the buying power of the investor to buy more. For example, if I want to buy shares worth 1 lakh rupees in cash, so I'll be able to buy only 1 lakh rupees shares in cash. But however, if I feel no, let me buy an e-margin, I'll be able to buy shares worth 3 lakh rupees, 3.5 lakh rupees, because it will enhance my buying power. From 1 lakh, it increases to 3 lakh 30,000. So here gives me the edge to buy more, and here gives me the edge to earn more in case the price goes up. So when I talk about leverage, it's higher leverage, it has a higher opportunity to amplify the profit as well. But do remember, in case the stock goes down, we also give stop loss wherein customers needs to exit the position if in case there's a stop loss, because since this market is there, so there could be profits or losses. So higher leverage means higher opportunities to earn profit in case the market goes up. Nominal delayed interest charge. So the leverage amount, if we charge 70,000 rupees, the leverage which customer has taken, so we'll charge a nominal interest of 0.05 per day. So nominal interest is being charged on the outstanding amount till the positions are settled. So we'll charge the interest on on the outstanding one, 0.05 per day basis. Customers can take e-margin positions by keeping cash or as shares as collateral. This means here it states, if a customer says, okay, fine, I do not have cash to pay, can I buy shares by keeping shares collateral? Yes. So customers can take positions by keeping cash as margin, or customers can give shares as collateral and take positions in e-margin. So customers have the choice to buy shares in any of the mediums by keeping cash or by giving shares as collateral. So both the options are available with the customer. When I talk about e-margin, it's the most important topic of the e-margin presentation. These stocks need to be kept in client's demat account. Since you bought the shares will be credited in your demat account, but it will be marked as pledge. So here, the stocks will be kept in e-margin under the client's account marked as pledged. So customers needs to pledge the shares. Customers needs to pledge the shares when the shares are credited into demat account of the customer. This product is available in Empowered mobile app and Pro Terminal. I meant to say here customers are absolutely free. They can either trade from mobile app platform, they can either modify from Empowered platform, or they can trade from Pro Terminal. So there's absolutely flexibility and fungibility across all the platforms. So customers can trade in across any of the platforms as and when customer deems so. There are approximately 640 shares. So I'll show you the list of stocks which are available for MTF. So all the list of stocks are available. So we'll show the list of stocks of MTF which are available. Now we'll talk about the cash versus e-margin, the details. Let us assume a customer has 1 lakh rupees and customer wants to invest 1 lakh rupees in e-margin. Uh, when a customer buys 1 lakh rupees in e-margin, he gets 3 times of limit. However, when a customer buys shares in cash, so we'll talk about first cash. So here, if customer is looking out to buy 1 lakh rupees shares of 100 rupees each, and expected target is 125, assuming customer invests 1 lakh rupees, 100% delivery of 1 lakh rupees, 1 lakh divided by 100 comes to 1000 shares. So your customer will be able to buy 1000 shares of ABC, 1000 shares of ABC at 100 rupees. Now here, if customer feels okay, fine, let me go ahead and sell the position when it reaches 125. The target reaches 125. 1000 quantity into 125 comes to 1,25,000. That means customer made a profit of 25,000 rupees. Customer made a profit of 25,000 rupees, less the brokerage minus the charges. So here customer will be able to earn 25,000 rupees. That will be the profit for the customer in this transaction, that is the cash transaction. However, if the customer buys shares in e-margin, here he'll be able to buy 3,000 shares of the same amount because he'll be getting leverage of 3 times. So here customer will be able to buy 3,000 shares of same amount, that is 3,000 into 100 rupees, that is 3 lakh rupees. Since 2 lakh rupees he got leverage, in case the target reaches 125, he will be earning 3,75,000 will be the net amount, and he would be earning 75,000 minus the charges, minus the brokerage, minus the interest as well. Interest, as I said, interest we charge 0.05 per day from the positions taken till the position being closed. So if you see here customer makes a profit of 3 times. When we talk about e-margin success ratio, we have given a success ratio of 63%, and we have given around 215 calls, out of which 208 calls were closed, 131 calls were positive. So in spite of the market being negative, in spite of the market not performing well, still we have achieved giving 63% success ratio during this market, during this period as well. So customers can invest in e-margin, invest through e-margin, but not at one specific stock. Customer needs to diversify the funds and invest in different sectors or different stocks even. So it all depends on investor and investor funds or the shares funds in different markets or different sectors, I would say. Here comes the word diversification. The customer needs to diversify the stocks before taking the positions in emerging. So this is the consolidated account statement where customers will get the consolidated account statement. This statement shows the details of the script which customers hold along with the buying price of the stock and the margin applicable. So every day the margin changes, so margin details are also given to the customers on a daily basis. Their customers can see the margins which are applicable on daily basis. The third last column will show how much percentage of margin and how much the margin applicable. Not only this, customers can also see the unrealized realized section. So your customers can see, okay, fine, I made a profit or a loss in each and every transaction as well. Customers can take positions, as I said, customers can take positions in eMargin either through cash or through shares as collateral. So summary of eMargin positions part B will show the details of positions taken through cash or from eMargin. Here you can see the details of the positions. In the second column, it shows the customers have taken shares as collateral. So here customers has given shares instead of cash. So if it is cash, so here it mentions the cash details. Since it is shares, so it's showing shares as collateral, how much collateral is he given, how much is the margin applicable, which shares has he given. So here down below you can see HDFC, he has given 100 shares of 2206. So 25% haircut, it comes to around 1,65,000. That is the collateral valuation. Out of which he is used 38,669, which is being shown here on the screen. So customers can see this report. This report is sent to the customers on a daily basis, evening, every day in the morning till the positions are open. So customers can see the details of script and details of the margin along with the profit and loss, security level, total applicable margin, cash and collateral details are available in this report. When we talk about this, as I said, MTF pledge is very important. So if a customer buys a position on T day, customer buys on position on T day. For example, today being a T day Monday, customer buys position shares today. Now the shares will be credited in client's demat account on T+1. Client shares will be credited in demat account on T+1. Once the shares are credited on T+2, the pledge links are sent by respective depositories. They are not sent by us. Hdfc Securities will not send the link because these shares are kept with depositories. So depositories will share the link. Depositories will share the link to the customer to pledge the shares. And this needs to be accepted on T+2 same day till 9 p.m. T+2 same day till 9 p.m. If not, then the positions are squared off. If not, then the positions are squared off on T+3. The next subsequent day, morning 11 o'clock, the positions are being squared off. Now let us understand the basics of margin, how it is calculated. For example, I bought a stock of ₹100. I bought a stock of ₹100 by paying 30% margin. 30% of 30 is 30% of 100 is 30 rupees. So I paid 30 rupees margin, remaining 70% raised with HDFC Securities. Now there can be two possibilities: the price may go up, the price may go down. In case the price goes down from 100, it goes to 90. The new margin applicable was 100, now it is 90. So here customer will pay a new margin of 27 rupees instead of 30 because the old margin was 30 rupees. 30% of 30 30% of 100 is 30 rupees. So customer paid 30 rupees margin. New margin is 27. Since 30% of 90 is becomes 27, so customer will be charged 27 rupees. However, we will give that 30 rupees back to the customer's ledger. Customer's ledger will be credited to 30 rupees and ledger will debit it from 27 rupees. But at the same time, when the market went down 100 to 90, 100 to 90, there was an MTM loss as well. So we'll recover that MTM loss, that is 10 rupees. So 10 rupees will be debited from customer's bank account since it is a M2M loss. Now can be, as I said, there are two possibilities in case the price is going up. In case the price goes up from 100 to 110, so the new margin applicable is 33 rupees. So 3 rupees more will be debited from client's bank account since the new margin is 33. There will be no MTM profit will be credited since the positions are open. Once the positions are closed, then customers will get the margin as well. Now we'll talk about the margin requirement. Yes, the margin requirement changes on daily basis. If the stock price goes up, the margin also goes up. If the stock price goes down, the margin goes down. So stock price is directly, or margin, I would say rather, margin is directly proportionate to stock prices. If the stock price goes up, the margin also goes up. If the stock price goes down, the margin also goes down. How is the M2M profit being credited? Once there's a profit in the transaction, M2M profit is not credited to client's bank account as per the SEBI guidelines, because customers needs to either square up the position and then go ahead and take the profit in their account. So it's very important for customers to know the this margins or the profits will not be credited in the client's demat account till the positions are open, nor they'll be credited which will be given in the trading ledger, since all these positions are bought under e-margin. However, the M2M profit to an extent of original price, if any, will be given to the customer's bank account directly. But please note, right? So I'll go for question answer session. Before going for question and answer session, I will show the screens as well. How will a customer go ahead and place the order in e-margin? So I'll go to our HDFC Securities website. I'll go to uh, here's the product of e-margin. I'll go to e-margin. So it's a cost-effective, low risk, and better returns. That is e-margin ETF. When I talk about e-margin, it enhances the buying power of the investor. There, customers can see the details. Now, in this page, customer needs to know which all scripts do we give e-margin. So customers can go to an important information section. I'll go to our home page. So customers can go to an important information. Here, list of eligible scripts. Here I'll get the list of e-margin stocks. I'll click here and I'll get the list of e-margin stocks. If a customer wants to take the position in the margin, customer will simply click on login. I'll enter my username. I'll enter my password. I'll enter my OTP. This is my entire dashboard of HDFC Securities, wherein I can place the order and I can see the details of not only e-margin, I can see my portfolio, I can trade in IPO, I can trade in OFS, I can trade in buyback. All the details are available here. Customers can place the order in any of the product which customer wishes to. So in case customer wishes to apply an order, I'll simply go here, click here and buy. I want to buy stocks called, for example, TCS. I'll mention TCS. I want to buy one quantity at a price of 3,200. I will not pay 3,000. I want to buy, for example, of less than 300, or I'll want to pay. If I can see, I can check the know your margin. Since it is not available, place an order. Comes on, the order will not go because the market is closed. So I can place the order from here itself. So eMargin is a product wherein it helps investors in buying more and taking leverage and taking the benefit out of the same. So I'm open for question answer session. I request all investors to have their questions so that I can clear their doubts and answer their queries as well. I'm open for questions. Sir, ma'am, if you have any questions, please do ask us. So we'll be glad to assist all your queries. So I'm open for question answer session. I request investors to ask their questions if there are any, so I can clear all their questions, all the doubts as well. Okay, there's a question from Mr. Parul. Is e-margin available for NRI? No, sir, it's not available for NRI clients. There's a question, Mr. Ulas. E-margin interest is 0.05 is deducted from bank account directly. Is it deducted when the stocks are sold? No, sir, it is not deducted when the stocks are sold. Only the brokerage deducted. 0.05 is only the interest which is being charged from the positions taken till the settlement day. We do not charge extra interest out of 0.05 on the selling day. We do not charge any interest on this. Any questions, sir, ma'am? Want to read? Kindly show the first two slides. Okay, fine, sir. Sorry. So you can see the slides which is shared on the screen. No, sir, we do not offer this facility for NRI customers. I'm really sorry. The question, Mr. Olas, when 0.05 interest is charged daily from account? Yes, sir, it is charged daily from your account. From the positions are open. So I will, if suppose if you take positions on today, we'll charge you interest from Wednesday. So Wednesday, you can see interest is being charged for Tuesday and Wednesday. So interest is charged from settlement till settlement, next settlement. Any more questions, doubts? Second slide, please. So you can see the second slide as well. I thank each one of you personally for attending the webinar. Please be connected with us and please attend our different webinars with regards to derivatives, pro terminal, SLB, and other products like DYSIP, small case. So these would be the products which can assist you out in making money. So I thank each one of you for attending the webinar, and if anything, kindly get in touch with our relationship managers or customer care team, who will be glad to assist you always. Thank you so very much. Have a great evening, sir.